Monetary and liquid stock measures. So in this introduction, we will see what are monetary stock measures and who introduced them. We will also see what are the current measures of monetary stock. So what are monetary stock measures? So these monetary stock measures were introduced by RBI during 1970, and Mr. Y.B. Reddy suggested changes to it in the year 1997 and implemented the changes in 1998. Now, what are the current measures of monetary stock? What are they? It is actually currency, and the current measures are M for monetary stock and L for liquidity aggregates. So these are the current measures of monetary stock, and we will actually explain this in the coming section. Monetary aggregates. So as shown in the table, the monetary stock aggregates are M0, M1, M2 and M3. So M0 actually gives weekly reports actually by the RBI. It is bankers' deposits with RBI, other deposits with RBI and currency in circulation. And that is a weekly report from RBI which is upon M0 actually. M1 is narrow money and fortnightly reports, which actually is current deposits with the banking system, 15% of DTL, demand time liability portion of savings deposits with banking system. DTL, as you know, it is a certain portion of the savings deposits which the RBI keeps in a central banking capacity. So 15% of DTL portion of savings deposits, it basically falls in M1. Other deposits with RBI and currency with public. M2 is fortnightly reports which includes M1, then certificate of deposits issued by banks, term deposits other than FCNRB deposits with a contractual maturity of 1 year. Time liability portion. There is demand and time liability portion for fixed deposits and all. There are differences. So the time liability portion, which is the remaining 85% of savings deposit with the banking system, it will also come under M2. M3 is broad money and fortnightly reports, which includes M2, call borrowings from non-depository financial corporations by banking system. It also includes term deposits excluding FCNRB with a contractual maturity of 1 year. So these are the different money aggregates from RBI. Next is liquidity aggregates. So some of the liquidity aggregates are L1, which includes M3 and all post office savings bank account excluding NSE. L2, which includes L1, term deposits, term borrowing from financial institutions, certificate of deposits from financial institutions, and L3, which includes L2 and public deposits of non-banking finance corporations. So before we go and wind up this section, it can be said that M0 is essentially monetary base, which is made from balance sheet of RBI. So also M1 is non-interest bearing banking systems monetary liabilities. What is M2? M2 is current deposits, currency deposits and short-term and savings deposits that are entities' transactional balances. And what is M3? M3 is nothing but the call funding which is from other financial institutions that the bank obtains. So you have to keep all these things in mind when somebody talks about monetary and liquidity stock measures. So this wraps a short session on monetary and liquidity stock measures. Thanks.